Ethereum is crashing and everyone is freaking out. The price plunged hard, shaking confidence across the market. But guess what? This isn't the end of Ethereum. It's the opportunity of a lifetime. When others are panicking, the smart money smells blood in the water, in a good way. Today, I'm going to show you why this Ethereum dip could make you rich if you play it right. We'll cover the charts, the on-chain clues, the whale moves, and the game-changing fundamentals that all point to one thing. Ethereum's crash is not a threat. It's your chance to seize the moment. Stay tuned because in the next 10 minutes, you'll see exactly why ETH dropping now could set up a run to $10,000 and beyond, and how you can position yourself before the rocket takes off. Strap in, this is going to be hype and 100% justified by the data. Now, quick pause for some good news. Weeks, our sponsor, is hooking you up with a free $1,000 Ethereum trade, no deposit and no KYC required. Seriously, just sign up and you instantly get a $1,000 position to trade ETH with on day one. It's basically free money to test the waters. We'll talk more about their bonuses later, but don't miss that chance. Grab that free 1K trade on Weeks, link in the description, and get ready to ride this Ethereum opportunity. All right, let's dive into the charts. What does this Ethereum crash look like on TradingView? Take a look. Ethereum plummeted from nearly its recent highs down to the low 4,000s in a flash. On the weekly chart, that red candle looks scary, sure. But here's the thing, we've dropped right into a major support zone around the $4,000 level. This price area isn't random, it's where buyers have repeatedly stepped in over the past weeks. If this $4,000 support holds, we could see a violent bounce back toward $4,500 or higher as short sellers scramble to cover. And even if we dip a bit more, next support is around $3,800, that would just be a final flush of weak hands, the kind of flush that often precedes giant rallies. Remember May 2021? ETH dropped 40% in a week, everyone thought it was over, then it skyrocketed over 200% by year end. History doesn't repeat exactly, but it often rhymes. This dip is priming the spring for the next big move. Now let's talk about Ethereum versus Bitcoin. While ETH USD is finding its footing, the ETH BTC chart is telling an exciting story. After getting absolutely crushed for most of this cycle, Ethereum is finally showing strength against Bitcoin. The ETH BTC ratio bottomed out earlier this year. It was down roughly 78% from its 2022 highs at one point, and has since rallied hard, up nearly 90% off that low. That's a big deal. It means Ethereum is once again gaining ground on Bitcoin. We're seeing the early signs of a rotation. Bitcoin led the charge this cycle, hitting new highs, dominating the headlines. But now its dominance is starting to slip. BTC's market dominance dropped from about 65% in May to 59% now in August, a clear signal that capital is rotating into ETH and other alts. Historically, this is exactly how big crypto cycles play out. Bitcoin pumps first, then Ethereum and the altcoins have their time to shine. The ETH BTC breakout implies that Ethereum's moment is coming. Bitcoin's share of the market is easing off the peak, and that capital is looking for the next big winner. Hint, it's Ethereum. So if you think you missed the boat on the Bitcoin rally, pay attention. ETH might be about to take the driver's seat. The charts are flashing that Ethereum is gearing up to outperform, which is exactly what you want to see if you're aiming for those bigger gains. Ethereum's fundamentals are on fire right now. Corporate treasuries are loading up. Companies like Bitmine Immersion and SharpLink Gaming are building multi-billion-dollar ETH positions. There's even a strategic ETH reserve being tracked publicly to show this institutional demand. And the biggest confirmation? Massive ETF inflows. In just one day, $2.3 billion poured into Ethereum ETFs, with BlackRock alone adding $640 million. That's Wall Street betting big on ETH. On the tech side, Ethereum keeps leveling up. The upcoming Pectra upgrade will boost scalability and confidence across the network. Meanwhile, Layer 2 adoption is exploding. Base, Arbitrum, Optimism, onboarding billions of dollars in activity, fueling ETH burns. And check this, Ethereum's TVL is at record highs on DeFi Llama, with whales still buying aggressively on every dip. So don't get it twisted, this crash hasn't weakened Ethereum. If anything, it's the ultimate setup for a massive move higher. Institutions, corporates, whales, and the tech itself are all aligned. The fundamentals are screaming bullish. Speaking of being prepared, let me remind you about our sponsor Weeks and how they can fuel your trading in this moment. Weeks isn't just giving you a free trade. At 4 minutes in, I want to highlight their massive deposit bonuses. Weeks is offering bonuses and rewards up to $30,000 for new traders. That's right, up to $30,000 in extra trading funds. It's basically a huge boost to your bankroll, and here's why I personally prefer Weeks. Ultra low fees and better fills on your orders. Their platform's execution is top-notch, meaning when you place a trade, you get the price you want without heavy slippage. Low fees plus good liquidity equals more profit in your pocket. They're literally paying you to trade on one of the most efficient exchanges out there. So if you plan to capitalize on this Ethereum opportunity, you need to check out Weeks. Don't leave free money on the table. I've got their link below. Grab those bonuses and make this ETH play count. All right, so what does all this mean for Ethereum's price target? Let's talk about that magical 5-figure number, $10,000 per ETH. It sounds huge, but under these conditions, it's not just possible, it's likely. Here's why. In the last bull cycle, Ethereum ran from about $100 after the 2018 crash to nearly $4,800 at the November 2021 peak. That was roughly a 48x increase from bottom to top. Even if you take the 2020 pre-bull baseline of a long $200, it was still about a 24x top. Now we're in a new cycle. ETH's all-time high is 4.8K. Hitting 10K would be about a 2x from the old high. That's peanuts compared to what it did before. A 2x is a blip for Ethereum. We're not talking about some unknown altcoin. We're talking about the number 2 crypto that has delivered outsized gains every cycle as it matures. In percentage terms, 10K is totally within reach, especially with the influx of big money and the constrained supply. In fact, many analysts now say $10,000 ETH is inevitable. Not if, but when. They see the writing on the wall. The wave of ETF approvals, the whale accumulation trend, the network growth, it's all converging. Some are even more bullish. I've seen reputable analysts calling for 12K, 14K, even 15K ETH by the peak of this cycle. For instance, one well-known crypto strategist predicts about $12,500 for ETH in 2025. Those aren't random moon boys on Twitter. These are people crunching the numbers and seeing what we're seeing. Ethereum's trajectory is up. Think about what it means for ETH to break 10K. At that price, Ethereum's market cap would still be lower than Bitcoin's at 10K, assuming BTC also goes up some. Ethereum is the backbone of decentralized finance, NFTs, Web3. A 10K price would give it a market cap just north of $1 trillion. Given the trillions in value Ethereum could be securing in real estate, stocks, global finance in the coming years, $1 trillion ETH doesn't sound crazy at all, especially when Bitcoin is already over $2 trillion at current prices in this scenario, BTC around 120K plus recently. If anything, a 10K ETH might end up looking conservative. With layer 2 adoption, Ethereum could even challenge Bitcoin's dominance down the road. But I digress. The key is $10,000 ETH this cycle is completely on the table. All the pieces are in place. Reduced supply issuance, ETH is ultrasound money now, increased demand from every direction, and a market cycle that historically peaks about a year or so after Bitcoin's halving, which puts us into late 2025. The current crash has simply created a better entry for those lofty targets. If we were still sitting at 5K, doubling to 10K is harder. But from 4K or below, the runway is clear. Once ETH recovers back to its ATA and breaks 5K, the explosion of FOMO from retail and institutional alike could make the move from 5K to 10K faster than people expect. Remember how quickly ETH ran from 2K to 4K last cycle? We could see something similar from 5K to 10K when the stars align. So if you're listening to this thinking, is he for real about 10K plus ETH? Yes, I am. And so are a lot of very smart, very rich people who are positioning for it. The recent dip is actually improving the setup. It's fleshing out leverage, transferring coins from weak hands to strong ones, and building a base for the next leap. When ETH starts ripping upward again, powered by ETF news or a big tech breakthrough or simply organic adoption, you'll be glad you took this crash as a cue to act, not retreat. Let's wrap this up with a reality check. Ethereum's crash is an opportunity, not a threat. You've seen the evidence. And before we sign off, one final reminder. Take advantage of that week's bonus to supercharge your gains. Weeks is literally handing you a free $1,000 trade and tens of thousands in potential bonuses to back your conviction. This is how you amplify an opportunity. Do it, hit that link, claim your free trade, deposit if you want, and grab those bonuses and get yourself set up. Don't just watch us make money. Join in and make millions like we are. The team and I are already positioned. We're riding this next wave, and we want to see you riding it too. Ethereum is down now, sure, but in a few months, you could be looking back at this moment and saying, I'm so glad I acted when others were afraid. This is your chance. Ethereum's crash is your opportunity.